You don't have any idea as to when that $20,000 target is going to be met? I see you on other media now as well. You're making the same headlines, $20,000 Bitcoin. When's that happening, Gareth?
Yeah, so all I can do, right, is look back at past cycles. And basically, if you look at 2017, it took between 6 and 12 months from that high to put in the low. Now, remember, after it put in the low, 20,000 was approximately the high in 2017. It then bottomed out around 3,500, but then it stayed between 3,500 and 10,000 for a long period of time, another year or two. So again, my thought process is within a year of that high in November, we probably will see the low. But then again, investors need to understand that it'll probably go sideways for a while before it really starts to rip up. So again, just to be clear, over the next 6-12 months, downside for me, right? When you talk about in the next 5 years, the next 10 years, huge upside. This is the answer. Bitcoin to me is the one asset. And a lot of people talk about Ethereum and other ones. Those are all technologies, right? Bitcoin is the only crypto where people are saying, okay, I'm going to hold it as a safety play against gold or with gold, against the US dollar, against the government printing of assets or all governments printing of assets. And that's really why I like Bitcoin most of all.
I've also kind of changed my own philosophy when it comes to holding cryptos. I used to just have I have a wallet and I hold everything there and I just keep it with the idea of just waiting a couple of years and eventually doing something about it afterward. But now I've tapered off that my holdings in the sense that I have something to hold for the long term, but also I'm trading the other half of it. So I have a portion that I'm not touching, but I also have a portion that I'm more, I wouldn't say actively, but more actively trading it. Like maybe when I do need to make a trade, like I did this past week, then I would execute in a swing trade. Is that something that you would recommend people do? Is that something that you do yourself? What portion of your total holdings would you allocate to just trading versus holding?
Wow, a portion of holdings. So that's a very good question because, based on people's different account sizes, that's going to be a tricky one. Because again, if you have a small account, it's hard to swing trade some and then day trade with the others or hold hodl for the others and so forth. So, but in general, I do what you're doing. And I think it's a very smart move. So for instance, I'm doing that with gold right now. I have core positions in gold. I have physical gold in my possession, right? And that's gold that I'm not, selling every other week or every other pop. But then I do invest in things like the GLD, the GDX, and those are positions where I swing trade. So multiple times this year already, and from December, I was in and out of GDX, making great money on the pops, but then I'm still holding my core gold positions. With Bitcoin, that's exactly what I will do. At a certain point, it will be low enough to say, all right, I think it's near the cycle low. I'm not going to be able to tell you exactly to the penny where it's going to go, but sub 20,000, somewhere down there. And I'll buy a core position, probably 5% of my net worth, that'll tuck away, and then I'll still swing trade Bitcoin with the remainder. So I think that is such a good play for people because you can generate short-term income from those swing trades while you're still holding for that longer term mega move. And you can participate in both. So you can see, think about someone who hodled from the 69,000 level. They're hurting right now, but if they were swing trading along the way, they might be down on those coins, but they could have been making money either shorting it in the interim or going long, buying the dip, selling the rip, and doing it in that respect. And it can actually really be a nice, handle for your extra income.
But let's suppose that the charts don't reach 20,000 anytime soon. At what point would you say to yourself, that's no longer a realistic downside target? I'm revising my downside target. Maybe at that point you turn bullish. What do the charts need to do to change your mind is basically my question.
So number one, we would have to go back up to the highs, right? So you get back to 69,000 and you take that out, then you have to say, okay, that needless to say, that wasn't a cycle of downward move. It must have been just an intra-cycle move, just like we saw from April into June and July and August. So I think that's number one, but there's more to it, right? So part of the thesis is the fact that the Fed is now dealing with inflation, right? So you have to look at that aspect, the fact that they're tightening monetary policy. And what that's doing is it's pulling money out of the system. So one of the big reasons in my book for why Bitcoin got as extended, as well as the stock market with crazy valuations, look at AMC or GME and all these things, is because there was so much money flowing in. It was free money everywhere. It was like airdrops of money from, 767s or 777s, just all over the place. if the Fed is really pulling back on that money, then you have to assume that there's less money to go into cryptocurrencies, to go into stocks. And so for me, not only would I need to see the highs get taken out to know that the cycle is over, but I would also need to see a Federal Reserve that starts printing again. So let's say all of a sudden the economy starts to really weaken and we go into a recession, and inflation, let's say, has come back to 4 or 5%. Maybe the Fed then starts printing lots of money again to get us out of a recession. Then I would say, okay, game on again. Risk assets are on the table. They can start to inflate again. Here goes Bitcoin along with tech stocks.
In the case that Russia does decide to invade Ukraine, I'm not saying they will, but suppose they do, analysts are saying 50,000 civilian deaths in Ukraine, a huge migration crisis out of the country into Europe, basically a very catastrophic crisis is going to ensue. What's the market going to do in that scenario?
I mean, if Russia invades in the short term, it will absolutely take a hit. You'll see fear and panic. You'll probably see the futures overnight dropping 200-300 points on the S&P. But I think that, again, what I look for is, okay, well, how does this impact the U.S. and the U.S. economy? And does the Fed then turn around and say, okay, well, now this is a new risk. Do we need to be a little bit more lenient in interest rates? And that could actually end up being a buying opportunity in the short term if you get a quick dip into that phase. Because again, anything that makes the Fed more nervous, likely to make them more easier on monetary policy. And then the market will respond, easy money, free money, let's go buy again. By the way, I'll just say one thing about Ukraine, and I can't help but feel bad because the US literally promised them security if they gave up all their nukes. And if they did still have nukes, then probably Russia wouldn't be messing around as much. So, I mean, it's kind of I feel bad. I feel bad for that situation. It's rough.
Well, what do you think is the likely U.S. response, just hypothetically?
Yeah, so definitely not militarily. The U.S. has had enough of that with the wars we've been in. So you're looking at more sanctions. There has been talk that the U.S. can do certain things with rates and currencies that would be very impactful to Russia. So I would guess that it would go that route. I think cyber attacks from the U.S. would be absolutely something that would be employed. I think this is the whole new phase of war going into the future, where it's done through sanctions, through FX type stuff, so Forex and currencies, and then also through cyber attacks.
Do you see a scenario in which Bitcoin could end at $100,000 this year? I've gotten that reading from several Bitcoin analysts I've spoken to and commentators. Just want to get your take because you're a trader.
Yeah, I mean, right now I don't see that as a possibility. I really don't. I wish I did, because I know there's a lot of people that are just holding, and unfortunately, a lot of people got in the 60,000 range. If you look at the average investor, a lot of them kind of bought into that hype when it was trading 60 to 65,000. But right now, I mean, the charts are definitely broken. Positive was this short-term breakout, but again, the probabilities, and I'm a trader, right? So everything I do is probability based. When you have this downsloping trend line right here, and then this trend line right here, the probabilities dictated a breakout here. But what also happens in more cases than not is you go back and retest that downsloping trend line. So the problem is this downsloping trend line is so fast, it's downsloping so quickly that in a couple months, it'll be in the mid 20s. And outside of even 2 or 3, 4 months, it could be below 20,000 on that retrace. So, I don't see it. It doesn't mean I'm right, of course. I've been wrong before, but I certainly am not expecting 100,000 this year.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn 500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.